Okay, welcome to our Find Your Next Six-Figure Infill Deal call. We do this live every Friday. So the format of the call this week is we're going to go over my background, and then we'll cover the details of how to get on the list, full-time access to our deal list. And then we'll go over the details of our 6 figures in 36 months or less deal offer with profit guarantee. So a little bit about me. My name is Zach Matson. I'm a developer and builder here in Boise. I got started in real estate back in 2013, house hacking, buying duplexes, living in one side and renting out the other. In 2016, I went full-time into flipping, and then by 2019 and 2020, I transitioned into infill development, and that's where I saw a lot more potential to grow my business and scale it the way I'd been meaning to for a few years at that point. Back in 2024, we scaled things up and got a bunch of units in the pipeline to our own personal pipeline. And then last year, we basically were seeing a lot of opportunities on the market that other people just aren't aware of. And, enough opportunities where we're not going to, we don't have the capacity capital wise to do all the deals ourselves. So we just saw that it was a good opportunity to bring them to other investors where they could buy the deal, and then we could use our team and our experience to get the deals done for those investors. And then that investor sees the upside. And then we also benefit because we're getting, revenue driven projects into our pipeline. So because of my unique career path with doing, going from house hacking to rentals to flipping to infill development. I have the hands-on experience in every stage of all these deals. So we've personally analyzed thousands of these deals and completed dozens ourselves. And then we've also held rentals, done flips, gone through entitlements, and managed both the horizontal and vertical construction. We are general contractors, so we do all the construction as part of this. So we're fully vertically integrated. We start with the end in mind, which is the final build and what your goals are with that build, whether it's holding on to them as rentals or selling them for the highest profitability, or maybe selling most of them and keeping some of them, maybe one of them as a short term and others as long term. So we have different strategies for all those scenarios where we can maximize your profits. So we're fully vertically integrated. So we do the entitlements, we design the project, and then we do the construction on the horizontal and the vertical. And then getting into our deal list, our infill deal list. So how you get access to this list full time. Now, this Friday call is free, where we give you kind of a snippet of a couple of the deals that are on the market. But if you actually want to get first full access to all the deals that come on the market as they come on the market, you can get access to our deal list, where we just share the spreadsheet with you, and you can look at it and see in real time as we add and analyze properties. So we let realtors as well as everyday investors on our list. As part of getting access to the list for realtors, we just have you either attend in person or rewatch our sessions on part 1 and 2 of infill development. That covers infill development and then our construction process. And then we also have our deal list Zoom call that explains how to review the deal list. We've made enough changes at this point. I think we'll actually redo that here pretty soon, probably the next few weeks, and cover all the changes on it more in depth. And then we just have you sign an agreement stating that if you're going to use our strategies with your clients, that you'll introduce us to your buyers early on in the process, so that we can do our job and make sure we can fully vet each project. And then as a bonus, we offer free marketing campaigns that you can co-brand with us to sell to your client, send to your client list. And then we also have other additional marketing materials that we give away for free as well. Now, if you're an investor, the way to access the list is the same deal. We have part 1 and 2 and 3 on infill development, our build process, and then how to look at the list. And then we just make sure that you're represented by a realtor that's been through our training. So if you already have a realtor that you work with, that's okay. We just have them go through the training as well. If you don't have a realtor, we have about a dozen or so realtors that we can connect you with that have been through the training that have access to our list. And then we just have you watch the or sorry, we already covered that, the three-part series. And then we also have you sign an agreement just stating that if you're going to use our system, that you're going to use us for the construction and all the phases. And then going into kind of how we make money. So we charge a consulting fee at the purchase. So partly that covers, setting all this up, but a big part of it is the due diligence process. We have a 19-page due diligence checklist we go through on every single one of these properties once it gets under contract. So we have a really systematic process. We do 90% of that due diligence for you. And so we charge a consulting fee for that. And how that looks like on subdivisions, or sorry, lot splits up to 4 units, we charge $15,000 at closing. For subdivisions from 5 to 10 units, we charge 25. And then for more than 10 units, so each additional unit, we charge 2,000 on top of that 25,000. Then we do the entitlements for you. We just manage that process. So we hire out all the professionals that we need to hire, and then we manage the entitlements for you. We just charge you an hourly rate based on actual hours worked there. And then we just charge our general contracting fee on the horizontal and vertical. Okay, getting into the 36 months or less deal offer, 6 figures in 36 months or less. So we created this. We realized at the beginning of last year there was a kind of a lot of opportunity on the market that people didn't really understand that there was opportunity. And so, we realized that most people aren't going to learn development. There's a lot to it. Most people aren't going to go out and find the information themselves. And honestly, the information really isn't out there on the broad market. So we kind of set up this system so that it kind of fixes the fears of losing money on a bad deal, or not knowing the process, or making a mistake, or projects dragging on too long, contractors cutting corners, or just not having control or visibility into the costs and timelines. So some of the core components of this is we offer expert deal underwriting. So we vet, analyze, and underwrite every infill deal on our list. We've gone through every phase of these projects. So we know all the costs and where all the timelines are, and where they can go wrong, and how to keep the projects on track. And then we offer negotiation support. So we guide you and your realtor on how to structure and present offers. Since we've been the buyers ourselves many times, we know how to get the deals accepted, and also on terms that work for both parties. Then we offer step-by-step due diligence. That's where the 19-page due diligence checklist comes in. We have this really locked in on the process. So we kind of uncover any kind of big red flags during that due diligence process that it'll either kill the project altogether or just add cost or timelines. And so we uncover that during the due diligence process, and then you get to decide whether to move forward or not by the end. And then we do the renovation of the existing house if that's needed. So because we are general contractors and we have a background in remodels, we can actually do this part of the system for you. And then we also do the entitlement management. That's where we manage the entitlement process with the city. And then the horizontal development and vertical construction we both do again. So the horizontal development, that's everything that's basically at ground level and below. So putting in sewer and water lines, street sidewalks, all that fun stuff. And then the vertical construction, that's the fun part, when we actually put the shovels in the ground and go put the foundation in and framing and all that fun stuff. So some of the bonus offers with our system. So we'll give you the ultimate guide, introduction to infill development. Some of you already got that in our welcome email. If you haven't received anything yet, we just reach out to us and we'll send that to you. And then we'll provide you with our due diligence checklist. So when you get a property under contract, we provide you with that due diligence checklist so you can follow along with our process. So you can see everything that comes up, and we'll also have a weekly check-in with anything that came up during that process. And then before the end of due diligence, we provide you with a 1-page underwriting worksheet that we base our guarantee on. And that acts as the final go or no-go underwriting for you to base your final investment decision on. So at the end of the project, we're going to compare the results with this guaranteed underwriting worksheet. And then once we start entitlements, we're going to give you our entitlement process checklist and projected timelines. So that's, again, kind of the due diligence checklist. It's just going to have a checklist of everything that we go through, and then kind of the estimated timelines for everything. Then we're going to provide you with our complete construction process and inspection checklist, kind of the same thing for the due diligence and entitlements. We're going to give you that construction process and everything that we check at every phase, and then also the inspections and the timelines with that. And then on top of that, we actually provide a third-party new home inspection report on all our builds. So that's inspected at 4 phases. That's at framing and rough-ins and then drywall. So you actually see what's behind the walls, which you don't normally get on home inspections. It's basically whatever you can see. The best case scenario is in the crawl space and in the attic, but you actually, on our new home inspection reports, you actually get to see what's behind the walls as well. Then we do an inspection at finished drywall, and then at interior and exterior finishes, and then one final inspection. That's also sometimes 2 parts because sometimes there's a couple last minute details that we have to touch up. So then you get that inspection report that shows what issues came up, if any. There's usually, a handful of things that come up that gets fixed, and then you can see where it was fixed and how it was fixed. And then we're going to start doing a monthly progress call that's also open to everybody. That just we're going to review the projects that we have going on, whether you're the owner of that or just curious about buying a project or investing in it. We're going to cover those details on a monthly call. We're going to cover anything that went wrong during that project, any progress that was made. So we have a few projects in the currently that we're going through, so we're going to cover all those. We're actually going to do that this month here at the end of the month. And then bonus offer number 8. So this is where we get into our guarantees. So we provide you with our entitlements guarantee. So basically what we do is we guarantee that if you don't achieve the unit count that we underwrite, we're going to waive our next fee or apply it towards the development costs. So for example, on this deal today, we're presenting a 16 unit townhouse subdivision. Well, if we get through the end of due diligence and say, okay, we can for sure do 16 units here. And at the end of due diligence, it might end up being 17, it might end up being 15. But basically by the end of due diligence, we're going to say, okay, this is how many units we can get. If we only get 15, but we tell you 16, then that $25,000 fee plus the extra, I guess an extra 6 units. So 2 times 6, so 12. So that $37,000 will either apply towards your next deal or towards the development costs. And then on the big one is our underwriting guarantee. So this is our profit guarantee. So we guarantee that if the project doesn't meet at least 100% of the projected profit at final underwriting, we're going to refund you up until it does. Now there is a limit or 2 limits on this. One is if it's a single split up to 2 units. So 1 or 2 units, we're going to do 50,000 total guarantee. And then if it's more than 2 units, we're going to do 20,000 per home. And then that's going to max out at 200,000. So on this deal, like if we say at the very end of underwriting, you're going to make $500,000, we're going to back that up with a 100% profit guarantee up to 200,000. So if the deal only makes 400,000, we're going to refund you 100,000. If it makes only 300,000, we're going to refund you 200,000. If the world falls apart and it only makes 250,000, we're still going to refund you that 200,000. You get up to 450,000. So there's still a little bit of risk there, but your buffer is much greater than just not having that guarantee in place at all. And then on top of that, if it makes 550,000 or 750,000, we're not going the other way on it. So there's still basically unlimited upside to it. Okay, so you're rolling all this, so you're making the big decisions. We're doing the heavy lifting. So you're actually buying this project. We don't own it at all. We are basically just the front to back contractor on it. So we're doing all the entitlements, design, and then all the construction. The timeline on them, they're usually our target is usually 36 months or less. Now, this deal today, it's Garden City and it's 16 units, which might be better if we did it in 2 phases. So if we tend to do more than 1 phase, it's going to be probably more like 4 years on these deals. On the smaller deals where there's just a couple units, it's typically 36 months. We've had deals that they're as little as 12 months. They're pretty rare. I think we saw 2 in the 7 months or 8 months that we've been doing this for people. So those are pretty rare. It's normally 2 to 3 years or I'd say just 2 to 4 years, depending on the deal. So your protection, because you own it, you always have visibility into the cost, timelines, and progress. And then again, you hold full ownership. So we only profit when the deal performs. So our incentives are aligned with yours. And then just with us and Matson Homes. So we specialize in infill development. So we do small multifamily ADUs and subdivisions, basically the exact strategies that we're presenting. And the strategies that cities like Boise and Garden City are encouraging. Okay, we're going to get into the deal of the week. Does anybody have any questions about what we covered there? I kind of blitzed through that. We cover it every week just because we have new viewers, and then for the people that are watching the YouTube replays.
Yeah, hey, this is Vasu. I had a quick question here.
Yeah.
Okay, so first off, thanks for the details. I don't think I have gotten a chance to look at the any of the videos that you mentioned earlier, the part one, part two, and stuff like that. I guess I'll talk to my realtor who hooked me into this to see if she can point me to those. Is that right?
Yeah, absolutely. And I can, if you want to shoot me a message, I can send you the links to those too, but they are on our YouTube channel as well. So,
Oh, okay.
Yeah, so if you go to Invest, Build, and Prosper on that's our YouTube channel, so that we have the all three links to those on there.
Wonderful.
But if
All
you
right,
can't
cool.
find them for some reason, feel free to shoot me a message.
Okay, yeah, I just sent you my email over private chat here to you.
Okay.
Over Zoom. Yeah, thank you. One other quick question, actually. So do typically people who are investors coming in, do they come in as individuals or do they come in as a business with multiple partners and stuff like that? How does that work usually?
Yeah, sorry, can you repeat the question? I kind of missed the first part of it.
So do typically people who are investing with you in these kind of projects and stuff, do they own as individuals or do they come in as a company and they kind of bring in other investors behind them?
Yeah, so you can do it either way. So we don't own the projects, you own the project. So if you want to do that as an individual, you can certainly do that. If it's if you want to bring in limited partners or partners with you, you can do it that way as well. So we actually have mostly these are individual investors that are buying these, but some of these are big enough where it makes sense to bring in a couple partners. So you certainly have that option, and we've done those deals ourselves too, where we have partnerships with people, and we do those deals. Some of the deals that our own personal deals, we actually raise capital on. So,
Okay, got it. Thank you.
yep. Okay, I'm going to get into my share screen here, and then we're going to cover the deal of the week this week. Okay, so this is our infill deal list. So for those of you that haven't been on here or watching the first time, so we have a few different tabs at the bottom. So this is how we track different types of opportunity. Basically, this is kind of evolved over the time since we launched it in about June, July. But we do tabs. So this is for single family, just like single lot splits. I think single or double lot splits. And then we have small multifamily development. So this is for 2 to 4 units. These are typically just like single or double lots that we can do duplexes to fourplexes on. And then we have a tab for subdivisions. So these subdivisions is where there's an existing house on the property that we can subdivide into multiple lots. It's typically 3+ lots. And then we have our vacant land opportunities, which is kind of similar to the subdivisions. The only difference is we're not keeping an existing home. It's basically just raw land. And then we just last week or 2 weeks ago, I guess, added this tab as the multifamily opportunities. Now, I haven't fully analyzed these deals yet, and I'm not super excited about any of these. So I'm not in a huge hurry to get this done, but I am kind of working on it. It just takes a little bit more in-depth review. But these are going to be multifamily 5+ units. Some of these are mixed use on larger lots, so they could be 50 or more apartments on some of them. Some of them are 20 apartments. We're doing a condo, well, maybe doing a condo development of 48 units on the bench. So things like that basically are here. Now, what I will say with the multifamily right now is a lot of them aren't penciling with the asking prices here, plus what the debt costs are on the exit. So I'm not super excited about these just because the debt costs on the exit aren't great right now, and most of them don't pencil because of that. But getting into the deal of the week here. Okay, so this is a deal that came on the market a little while ago, I think a couple weeks ago, but they just actually had a price reduction this last week, and it actually got down into where it's a pretty good deal right now. So if you guys aren't familiar with Garden City, so Garden City is, for the past, 5, 6 decades, it's been pretty overlooked for development. There's a lot of mobile home parks there. And just in the last 15 years, it's been getting really developed, and that's picking up steam as we go. The area around the Whitewater Park area, that's become like a huge booming area for Garden City. And really, I see that little pocket there is expanding all the way west to the fairgrounds. We're already seeing it in developments. I already have a couple developments I myself am doing. And then we also have one for another client that we're doing there. So basically that whole corridor between Chinden and the river, and then from that 34th Street area all the way west of the fairgrounds, it has just huge development potential. So there's, in the last couple of years, there's been some pretty impressive apartment complex that have been built there. There's some really cool townhome developments. We have a detached single family home development over there. So lots of cool things happening in Garden City, and it's really just becoming like one of the best places to live and work and recreate in the area. Okay, so this deal is on 40th Street. So this is still east. Let me pull up the map here. This is east of Veterans Memorial. So there's usually a little bit of a price difference from west versus east of Veterans Memorial as far as land prices. And then so a few things. This area over here, there's a lot of townhome developments going in over here, like this pocket right here next to the river has been developed in the last couple years. And then this area is the area I was talking about 15 years ago, it started being developed. And then really it's blown up in the past few years. So this whole area, which is just a few blocks away. We have a project right here. We also have a project a couple blocks on the other side of Veterans there. And this is actually similar to a deal that we presented a few weeks ago that ended up getting pulled off the market. Just the next block over, it's actually the same size lot and it's the same price. So kind of, I mean, really similar area. This is a closer to the river, but a little bit further away from the 34th Street area. But we were actually able to basically copy and paste the plan that we had for the other one on this one. It actually works out really well. So what we have for this one is a 16 unit townhome development. So the purchase price is 600,000. Ideally, somebody would just go in and buy that land cash. Now we underwrite this differently. We underwrite this with getting a loan on the land. So doing 60%, a 60% loan. So doing 40% down. This is your total capital invested that we expect for the whole project. So this is other costs as well, like the entitlement costs you do out of pocket. And then your holding costs, which is the holding cost for the land. Now, this property does look like it still has 2 trailers on there still. So we actually have, this is your loan costs and your carry costs for the 3 years on the land portion of it. So this is basically 3 years of interest costs at that 60% plus the taxes. And then you have, for the first year, you can actually rent out the trailers, it looks like, and get a little bit of your income back. So that total capital involved is including this dollar amount here. And then for the entitlements, so this is per lot. So we break this out so you can see the profitability per lot. So this is not your total cost on entitlements, it's your cost per lot. So we have what we feel like the where this likely should sell at, but where we think the offer price would be closer at would be probably 550,000. Ideally at 600,000, we actually underwrote it and it still actually makes sense, but we feel like 550 would actually be a really good deal. So this is just the amount per lot that it might be overpriced. And then we have our entitlement cost per lot, the development cost per lot, and then what your per lot value is. So the great thing with development like this is you have multiple exit points. So we're preferring to go into these deals with people that want to build it all the way out. That's where you make the most money and have the most upside. But the nice thing is you have multiple exit points. So we like to see this where you have a developed lot that you could still sell and make a profit. And that's at a pretty conservative value as well. So that's probably more like probably close to 110, possibly even 120 or 125. And then we have this, we have three different size of products on this project. So we have two 3-bedroom, 2.5 bath layouts, and then a 2-bed, 2.5 bath that's a little bit smaller. And then none of them are over, we're not underwriting any of these over 500,000. So they're all about 500,000, sub $500,000 price point, which is great for Garden City. Particularly in this area, because a lot of people really want to be there, and that 500,000 is pretty affordable for that area. So then we have our average construction costs on these. So each unit is different, but this is averaged out per unit. Same thing with these resale costs. This is averaged out per unit. And then you have your total costs in there. So your average profit per unit here. Now, the what we don't factor into these is like 3 years from now, more than likely the costs, the prices are going to be higher. We don't factor that in. So we factor this into, okay, what's today's prices and also today's costs. So typically this gets higher as you go, because even if you have just average resale inflation at, it's usually the market is, 5%. In Boise, that's actually pretty low. But if that's 5% inflation, this will get higher, even if you have inflationary costs on the construction materials and labor, which is on average typically 3% a year. So that gap usually increases, and this becomes more profitable on most deals. We just don't project that out because we don't want to guess what's going to happen in the market over 3 years. But I would say right now, the way it looks is that's going to get better. So we have your total profitability if you sell every house and just take the profits. Now, the one thing this doesn't account for is your tax advantages here too. So you could actually, now, obviously you want to talk to your accountant, but whenever you do ground like development work, there's actually, I think 100% of that is 100% bonus depreciable. And then if you're keeping some of the units, you also have the opportunity, I think, to recover some of those some of the construction costs on the vertical as well. So again, something to talk to your accountant about, but that's some additional possible savings just in taxes that won't necessarily be reflected on the true profit. And then you have your capital invested. So this is the total capital. So this is putting 40% down on the purchase and then carrying it, the carrying cost through the whole project. Now, once you actually get ready to, that also covers the entitlement costs out of pocket. Now, once you get ready to go vertical, we actually have our construction lenders that'll typically fund, because you're into it with the right amount of cash and the right leverage. They're typically going to fund the horizontal and vertical at 100% or really close to 100%. So you typically don't have to cover any of the construction costs out of pocket, and most of the time they actually cover interest costs in there as well. So this deal is actually analyzed that way because the leverage amounts are the right set up properly. This is your total return over that period. This would most likely be 2 phases, so that's where we think it'll take 4 years, and then your annualized return over 4 years. And then what we do here as well, so we also analyze these. If I slide all the way over here, so this is if you wanted to refinance the whole deal and hold them as long-term rentals or whatever. More than, like, this wouldn't pencil with today's interest rates, but we also underwrite this with, if you just want to keep one unit, what this is showing here is your cash back if you just keep one unit. So you could sell 15 units, get all your capital back, plus an additional, sorry. So you get $520,000 back after you sell them and pay off all this debt. And then that 520,000 goes against the 429 in it. So you get a total of $90,000 cash back on top of your original investment. And then you're left with a house for free. So that's how that works. So basically it's selling 15, keeping one, but then you get $520,000 back from that 15 sold, which pays off all your debt, plus gives you all your original capital back, plus an extra 90,000, and you end up with a house for free. Now you could also set this up. I think the way it would work, I'd have to underwrite it officially if somebody's interested, but I think the way this would work is you could actually keep 4 units at 75% loan to value, and those should break even on cash flow. And then you'd basically get all your cash back, have $0 of capital into the deal, and own 4 units. Now they're typically not going to cash flow right away, but they will over time, and all your cash is out, and you end up with 4 units. And then this is your cash flow, assuming that you keep one for free. So this is like what the rents are going for in that area. We factor in the what we expect the property taxes to be and insurance. So this would be your monthly cash flow. And then if you manage it and put aside money for repairs and everything, that's what this factors in. So your real cash flow on this would be $1,545 per month when it's all said and done, if you just keep the 1 unit. So ultimately, your cap rate on that is based on a $0 ownership fee. So it's kind of an infinite cap rate on it. The cap rate obviously would be calculated differently if it's on value, but since you're owning it for free, the cap rate is pretty fantastic. And then this is a short-term rental in this area. The just short-term rentals don't look as good as the long-term rentals. Um, and again, with short-term rentals, we just go off of AirDNA data, so that's not always super accurate because it's not comparing new construction versus new construction, that kind of thing. Okay, any questions on this specific deal? Okay. I'm going to move on to some additional details here, or sorry, deals here. So this is the other deal that is almost identical to this. This is basically the exact same size lot, just a block over. This is currently off market, but if somebody's interested in this, I'm pretty sure we can reach out to the seller. It was on the market for a long time and it just didn't sell. But I'm fairly certain we could actually get a little bit better deal on this price even. So if somebody is interested in even picking up both of these or just trying to negotiate the best deal on these, is essentially the same project. They're close enough where like the product and the layout would be the exact same. So there's a couple other deals that were new on the market this last week, or I guess the last 10 days or so. We analyzed a few of these. Some of these we started analyzing and then they just weren't a good deal. So that's this Don Drive. This would actually lose money at this price. So even though they're build-ready lots, what we're finding right now in West Boise is it's almost impossible to make a profit on new construction. Even for me to build it at cost, and then bring it on the market, uh, my margin would be so slim, I wouldn't even do the deal. Whereas, if you buy it as an investor and then hire me to build it, you're actually losing money. So unfortunately, most deals on the West Bench, aren't, or West Boise, I should say, aren't penciling very well. Now there are exceptions, but that's what we're finding a lot lately anyway. And then we have, let's see, there was another deal on 35th Street. This is actually over in the Whitewater Park area. It's a small lot. The problem is the about the only thing you can do with it is build a single family house. Even as a commercial, it's a lot, it's too skinny. You can only put a couple parking spots in there, and even at that, you can't really do that because you can't back into the main road. So ultimately, like pretty much the only option is doing a some sort of single family home. And this is probably a little bit high priced for that. Now there is land directly on the rear side of it. So if somebody wanted to buy, let me see if I can find it. So if somebody wanted to buy this, I think it's on 34th. Yeah, this one right here. This is directly behind this property, so we could maybe turn this into something, using the other property as some kind of road system, and so probably get more dense in here by adding the projects together. It'd have to get creative. I haven't looked at it that way just because we haven't had anybody interested in these bigger deals yet. But if somebody's interested in that area of town, or that area of Garden City, this is literally right next to Push and Pour there on 34th Street. So great location. It is a higher purchase price. You do have higher resale values there too. But it just takes a little bit more capital to work with there. This was another deal that was interesting on Arcadia Street. This one we could have torn down the house and built 3 additional houses. And then this could have actually been about a 12-month deal. Not a great return here, but we could actually probably sell the existing house and have somebody haul it off and get this pretty close to $100,000 return. But we've had some people reach out asking for 12-month deals, which are really rare, but this one theoretically could be 12 months. You just don't have as much profit margin there with a little bit more capital invested. But for somebody that wants to do, a quicker turnaround on their capital, we do see those every once in a while. I think this is maybe the third now that we've seen in the 7 or 8 months that we've been presenting these. And then let's see if there's any subdivisions here. We did see this one this week that came on the market on Eagle Road. Unfortunately, they are way overpriced. This has to be probably pretty close to 400,000. This number isn't fully accurate because we kind of stopped analyzing it when we just saw that this number was just outrageous, but we need to hone it in a little bit more, but it's at least double overpriced. And then same thing with this deal. So sometimes you'll see like this orange marking on this price. This is where it's like just so outrageously priced that there's no way it'll pencil. This is another one, sometimes, realtors that don't understand development, and sometimes it's instigated by the seller, just not understanding that land doesn't have as much value until you actually improve it. Most of the time, raw unentitled land is worth very little, even if it's in town, because you have to put in some infrastructure and you have to put in some money to get it there. So when you're starting at what the resale price would be on the lots themselves, without even putting in any infrastructure or entitling it, that's already, kind of just doesn't work. We do have this deal that we're currently working on getting under contract. We have an LOI that's accepted. So this might be a deal that we do on our own, or we might present this to investors. And these aren't final numbers, but this is like initial numbers that we're looking at here. So we'll likely share this in the next couple weeks. So if anybody's interested in a bench project, we will most likely present that, or see if somebody wants to partner on it or something. And then we also have this deal still. So this is another one on Hill Road. So the benefit so getting back to these subdivisions. So the benefit with these subdivisions, they have an existing house on the property. So you can actually get into them for typically less capital involved, because there's inherent value in that house. So for example, this one on Hill Road here, there's an existing house that this house without the land is worth pretty close to what they're asking, especially now because I think they've come down in price by over 100 grand. And so you could theoretically buy this house, and then live in it with even less money down, or just buy it as an investment property. You're going to be negative cash flow on it just because of the high price, but it's pretty good shape house. It is a little dated with the paint and wallpaper and flooring. So, if you wanted to fix it up and rent it as an Airbnb or something, you could put some money in there. We do have money in the numbers to just basically fix the updating of it. But then basically the idea is to hold it, put in the infrastructure, and then sell it off, because most of these houses, they're not good investments just standalone. Like you wouldn't buy this house as an investment if it wasn't a development. So by the time it's all split off, you just sell it, recoup your cash back. That's where this number comes back from. And then you have your capital remaining in the deal. And then the total profitability on this one, again, is about 500,000, and that's just adding 5 houses. This location, so it's northwest Boise, pretty great spot, and it'd be a really cool subdivision. So it's a 5-unit subdivision. The lots would be a little bit larger. We could do a little bit larger homes on it. That'd be about 2,400 square feet. We could even do larger than that, but I think 2,400 in that area is the sweet spot, and we actually have some good comps in that area as well. So this is, pretty good. There's some pretty great margin per house on this deal. Also, and then where you kind of lose some of that margin is reselling this existing house. And we're assuming, not much changes in the market in the next year. I think once you put this, 35,000 into the updates, this is probably worth, you know, at least what you put into it, maybe a little bit more. It might get closer to what they were originally asking. But we're just not going to assume any of that. So we're going to assume you lose a little bit of money on that house. But then you have enough margin on the rest of them. And then on this deal, same thing here. You could basically sell the original and 4 houses, and then you'd only owe 40,000, or yeah, you'd have 40,000 debt remaining on that the 5th house. So you could and then you wouldn't get your cash back on that one, although you could refinance it back out. So you could actually get all your cash back and then own a house basically with no cash out of pocket. And have probably about 300,000, it looks like, in equity, 250, 300,000. So that's another good play there, and a great location in Northwest Boise. Let's see here. This is another off-market deal.
Can I ask a silly question here?
Yeah.
So when you say that the investment is needed this much, but then there is also the cost of construction and stuff like that, right? So how does the lending work for that? Do you already have like lenders lined up or something, or you take
Yeah.
care of those things, or how would that work?
Yeah, so we have lenders that we work with that will finance the horizontal and vertical construction typically. Now, where it gets a little bit tricky on these subdivisions where it's not raw land, where you're dealing with an existing house.
Mm-hmm.
So this actually takes a little bit more capital on the horizontal construction because you're actually like doing that out of pocket, because a construction lender isn't going to go into second position. So that's something that I think eventually we're going to, either work with lenders or maybe start our own capital group that we're funding the horizontal on these in second position, kind of like what an apartment syndication would do, where the capital fund goes in second position behind a bank note. And that's just short term. So basically you have to either pay that the horizontal infrastructure out of pocket or get some kind of loan on it. This is factoring in doing it out of pocket. But then that just takes, on this project, it'd probably be about 5 months of construction. And then it takes 3 to 4 to 6 total months to get that plat signed after that. So up to a year. And then you have that original house then can be split off because it's on its own separate lot now. So that's why this capital is a little bit higher. But there are ways, especially if you know somebody that, would be interested in doing a private loan on it or something in second position, you could theoretically do this for a little bit less capital out of pocket. Um, but yeah, that's something on these deals you have to do the horizontal out of pocket or get creative there. On the land, you can actually do the horizontal with a normal construction lender that does land horizontal, which we know we have a handful of lenders that do, because you're not dealing with an existing house that has a loan in first position. Um, so yeah, did that answer your question fully?
I think so. I think so. Thanks.
Okay. And then
So
same thing with the vertical, we have construction lenders that'll lend on
so
those.
as investors and as owners of the project, we just bring in the capital, and you'll take care of getting the lenders on the line and stuff like that.
Yeah, I mean, as the owner, you're basically going to be responsible for the
Sure,
loan, but a lot
sure.
of times it's going to be like one of those things where we're kind of co-applying for the loan because the lender will like to see us on the
In the
project as
Yeah,
the builder.
right, right,
So
right, right.
yeah, but you're
Got
still
it.
basically owning the property and guaranteeing the loan and all that fun stuff.
That makes sense. Yeah. Okay. Thanks.
Yep. Okay, I think that's it for the subdivisions. And then we did look at this property. This came back on the market. Now we originally sent this out as a deal of the week a couple months ago, but we analyzed this a lot differently and it doesn't actually look as appealing. It still looks okay as a, it has a 5.75 cap rate as a multifamily, and it actually would look better because this could actually be two fourplex, or sorry, essentially two fourplexes. You could actually sell one fourplex, get some capital back, and then this would even be better. It'd probably be like 6.25 or something. So you could leverage by selling one and then keeping one. But we kind of analyzed it differently with much more conservatively, and that changed the numbers a little bit. So it wouldn't necessarily be very profitable to sell both of them because you lose some money on the sales cost there. The other thing too is this could be, anybody that's familiar with, multifamily, a lot of it totally hinges on what the interest rates are and what the rents you can get for them are also. But anyway, this is could be a potential for anybody that's interested in small multifamily, particularly if you just want to buy two lots, build one fourplex, sell it, and then keep the second one at a much better deal. You just lose, you lose about 100 grand in sales costs when you go to sell one. So that's where a lot of your profit goes, is on those actual sales costs. That's where that is. So yeah, you're losing 90 grand there. And then also a lot of the times when we're analyzing these loan costs, this is usually pretty high for what you can actually get. We just are, again, we go into these really conservatively because our whole goal is to under promise and over deliver. So typically we can get in quite a bit lower than this, not, not half, but, sometimes I'd say 10 to 25% lower than what this cost is showing. We just try to underwrite it conservatively. And then even better too, if you're using like a local bank that you're converting into a long-term loan, that'll actually be even better. Let's see, I think that it might be it for this week. Let me just check these single family. Yeah, we had this deal last week. Unfortunately, we didn't have any of our people buy it. I kind of knew it was going to go pending the same weekend because this is North End. Pretty good price for a 2-bedroom. And it was it was a cute house anyway, but it did have some good potential for a lot split. And then we also have this single lot split too. This is another one that has some pretty good profit potential for little capital. So I think the final underwriting, not the final, but the underwriting we sent out was this profit with a little bit more cash. I think it was like 85,000 cash out of pocket. But if somebody's working with a little bit less capital, but want a good return, this is actually a great one. It's kind of, it's a little bit funky because the new house would be a skinny row home, which, if you're familiar with the older parts of town, they're all over the place. That's a normal thing to see. Just a lot of the people that we show these to aren't used to seeing those necessarily. So when we show a 16-foot wide house, they think it's skinny, but it's actually pretty normal, particularly for this area of town and really anywhere over in Boise. So if you see the row homes, in the older area neighborhoods like the North End, the Southeast Boise, and the Bench in particular, those row homes are typically anywhere from 15 feet wide up to 19 feet wide. Just kind of depends on the development and when they did it, if they did them all together or whatever. But a 16-foot wide home is completely normal. We have, pretty good functional floor plans with those row homes, and they get some good resale prices.
Yeah, so that
Right, I
you
think
said that
that's,
particular one is still available or something for somebody to
yeah,
use?
yeah,
I
this
see.
one's still on the market. I actually just checked it, and let me pull this up here.
And the whole period of 2.5 years, 2.5 years is to subdivision and build construction stuff. Is that right?
Yeah, yeah. To give you a little overview on the process, so typically any kind of subdivision or dividing of land is broken into 3 steps. The first step is entitlement, and that is basically that's actually multiple steps. You have to get planning and zoning approval, city council approval typically, and then you also have to get construction plans approved. So that 3-step process takes, and there's a little bit more steps of that too, but that whole process takes about a year. And then you have the second major step, which is the horizontal development. That's where you have to put in the infrastructure. So that's putting in your sidewalks or street widening if it's required, your utilities. So even on infill lots, there's usually some of that you have to do. So like this one, you have to put in sidewalks and widen the street. We factor all those costs into this. But uh, but yeah, that whole process. So even though on this project, though that infrastructure would only take a couple weeks to do, you still have to get the plat signed. So that typically takes about 6 months. I'd say between 3 and 6 months to get the plat signed. And then however long it takes to get the development done, which again on this one it's pretty minimal, so it could be done in less than a month. So your overall horizontal would be about 6 months. And then we plan for construction typically takes six to 7 months. And then just, your exit strategy, if you're going to sell it, you have to market it or put it on the market. It's got to close, go pending and then close. So we just, factor in usually about a year for that whole thing to take place. If you're refinancing it into long-term debt, obviously you can refinance as soon as you get a certificate of occupancy. So theoretically, this could be done in probably as little as 2 years or just a tad under 2 years. But to do it, to build it and then sell it all, you're probably looking at about 2.5 years.
Thank you.
But yeah, this one is, it's turnkey. This is actually a pretty good price. I mean, it's a little bit dated, like I'd say like late 90s dated, so it's not bad. But it's turnkey. It could be a rental, somebody could live in it. And then, you have this where you could rent it out while you're waiting for the processes to get through. So through the entitlements and the development. So you're not losing money on it on the house payment monthly. You'd be, probably a little bit negative depending on how much you put down. Or if you live in it, you just have somewhere to live for a couple of years until you build the new house.
How come?
So the net that's
Sorry,
okay.
you were showing the in the Excel file. You were showing something like. Is that the same home that you're showing on the Excel file?
Yeah. Yep. So this is so this is that house that I was showing on the
Oh,
Excel.
okay. Can you please go back to the Excel file?
Yeah. Yep. So that's this one. And what we factored in with this underwriting here, the line that I'm highlighting here,
Uh-huh.
this is with if somebody's going to live in it. So this would be a little bit less capital, doing like an FHA loan or standard loan at 3.5% down.
Mm-hmm.
This is the underwriting on it if you got like an investment loan. So
Mm.
um, we know there's at least one lender out there that'll do 15% down on an investment property.
Mm.
And it's not a DSCR. So this would be the capital if you didn't live in it and rented it out. And then that's also factoring in any kind of negative cash flow you have on it. And then also paying the entitlements out of pocket.
Got it. Thank you.
Yep. And then going over here, so you actually there's really good margin in this neighborhood. Southeast Boise just has really good resale prices on these new construction homes. So the margin on the new build is great. You lose a little bit of money on the existing house, particularly if you sell it, because that's what, most of this loss is from the resale, like selling it, those sales costs. Um, and again, if you go to sell it in 2 years, the market could be completely different. Good or bad. I think it's probably trending on the upward trajectory. So this could be, if it's 10% higher, all of a sudden that goes away. Um, so there's some potential there. Okay, I think that's all the properties I wanted to cover today. I'm going to stop the recording here and then open it up for questions.